So welcome to a brand new video here on my channel, and if you don't know me, I was one of the first YouTubers here on YouTube that talked about Tesla stock, and believe me, I got a very much hate for that because many didn't believe in the story of Tesla. But because today the stock market is closed, we have maybe some time for some other conversations. I have seen a couple of people saying, oh, he only talk about space and he talk about just a handful of stocks and so on. In fact, I'm really talking only about, a handful of stocks, 5 stocks, Tesla, space, Beyond, and Peloton. And what is the 5th? Well, I don't have a 5th, but maybe there will be a 5th very soon. Stay tuned. I do this because that's actually my strategy, okay? I feel that so many people out there, they are just too unfocused, okay? They are having a specialty which they don't double down on, and then they are looking into 20 different asset classes or stocks or crypto and so on, and they lose themselves and really not go forward, okay? In the bull market, guys, everyone makes money. But what about that we are now entering a market that is maybe quite going, nowhere? Then you need to be in really those companies that even outperform when the market or stock market is flat, okay? And this is just pure through really great research, and this is what I'm trying to say here, okay? And there's one friend of mine who actually said, instead of going a kilometer wide and an inch deep into all of those stocks and companies, I rather go a kilometer deep and an inch wide, okay? So what does it mean? For example, when there is a company that I really like and I have a high conviction, for example, Tesla, I try to read all the materials out there, but not only there, okay? I read all the comments on different videos. I look through customer reviews. I read all the Reddit, all the Twitter. I go through many information points out there. I read all available books. I am really following every single podcast there is on this company or on people that are connected to the company. If an executive leave, I try to contact him and ask him, or try to ask him, between the lines, if it was something that is maybe negative or positive. This was, for example, when this head of production, the German Peter Hohinger, I think was his name, left for Lucid for the company, and I just sent him a LinkedIn message and said, what's going on? Is it everything on good terms? You did a great job at Tesla. And he said, yeah, everything on good terms. Same I did with George Whitesides when he left space. I texted him on Twitter. I said, hey, what's going on? Is it something good, bad? And he said he's super excited for the things that are coming up for the next year for space. So you can see here the mentality that I try to bring on, and this is really doubling down on high conviction. In the end of the day, if you think about it, this is exactly what made super ultra wealthy people very much wealthy, right? I mean, they had very concentrated bets on single companies. Like, for example, the net worth of Elon Musk, who supposedly, was for a very short time the richest person on earth. He was first concentrated all in, Zip2, his first company. Then pretty much all his net worth was in PayPal. Then all his net worth was split between SpaceX and Tesla. And, that's pretty much about it, right? Jeff Bezos made a huge bet and still have a lot of shares of Amazon and so on and so forth. So, what I'm trying to say is that, diversification is good, but try to diversify on high conviction only, okay? I try to, not to spill so many stocks out there just to catch different audiences because I want to have more views or more subscribers. I rather show you guys that my high concentrated bets that are based on hard time research are going to fulfill themselves, hopefully. right? I mean, there's always, the risk of not succeeding or being flat or not overperforming the market. But, since I'm on YouTube about 2 years very soon, you can see that the track record was brilliant, okay? I just had, Tesla was in 10x stock. Space had still a tremendously great performance since the time at around $17 where we start to invest in. Beyond Meat is in my portfolio since about the 80s, so $80. Peloton also around 90. So, all of those stocks performed very well. And the question is if I'm right in my research and investments, and we see further growth into these names, okay? But this only time will tell. And I just wanted to explain you guys, because for those who are saying, we are just looking into some very, very small few diamonds, but I really rather look for the diamonds than going through all of those dirt that is out there and talking about companies that I'm not even interested in. So I think that this is something that is my specialty. I really dive into rabbit holes. This is my personality, right? I sometimes can find myself working a couple of hours just on this one topic that is interesting because the company invested into that, and so on and so forth. But if even me cannot convince you that this is maybe the right step, let us see what other big investors are telling us about how many shares to own and so on.
I am very interested in your policies on diversification and also how you concentrate your investments. And I've studied your annual reports going back a good number of years, and there's been years where you had a lot of stocks in your marketable equitable securities portfolio, and there was one year where you only had 3 in 1987. So I have 2 questions. Given the number of stocks that you have in the portfolio now, what does that imply about your view of the market in terms of, is it fairly valued, that kind of idea? And second of all, it seems that whenever you take a new investment, you never take less than about 5% and never more than about 10% of the total portfolio with that new position. And I wanted to see if I'm correct about that.
Yeah, well, on the second point, that really isn't correct. We have positions which you don't even see because we only listed the ones above 600 million in the last report, and obviously those are all smaller positions. Sometimes that's because they're smaller companies and we couldn't get that much money in. Sometimes it's because the prices moved up after we bought them. And sometimes it's because we may be selling the position down even. But so there's nothing magic. We like to put a lot of money in things that we feel strongly about. And that gets back to the diversification question. We think diversification is, as practiced generally, makes very little sense for anyone that knows what they're doing. Diversification is a protection against ignorance. I mean, if you want to make sure that nothing bad happens to you relative to the market, you own everything. There's nothing wrong with that. I mean, that is a perfectly sound approach for somebody who does not feel they know how to analyze businesses. If you know how to analyze businesses and value businesses, it's crazy to own 50 stocks or 40 stocks or 30 stocks probably.
So as you can see, even Warren Buffett says it's crazy to own 30, 40, 50 stocks or different assets, right? Because if you are specialized in something, and my personal specialization over the years became quite clear, where I can really best, maybe one of the best in the whole YouTube finance industry, to value and understand consumer innovative companies. What does it mean? I understand when a company can create a cult and a product that is so innovative and reach millions of consumers. And I know it's so hard for other people to comprehend sometimes. And I spend hours discussing with friends, families, stranger people about why Tesla will maybe become the most valuable company, and they are so far ahead, and there's a cult and customer loved the product. And the people said, Tesla have so many products, and it was obviously, very much painted through this bad picture that the media created, right? So I understand that. I not expect, and I think this is the best thing to say, I don't expect everyone to understand it, and I want to help you to understand me better. And that's why I think this is a very fantastic video to explain a little bit more what I think about the market and how I approach it, and how you should maybe take one or two wisdoms from me or from Warren Buffett to be a better investor. And I see you obviously tomorrow.